Facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on March 15, 2022, and the S&P 500 has entered into a death cross. So yeah, it sounds kind of scary. I mean, death cross, it doesn't sound good, but what happens is the 50-day moving average, it drops below the 200-day moving average, but what has people kind of worried, usually this is a negative indicator, and it has only happened about 25 times since 1970. So that's the first part. We need to talk about it. Today was a very wild day. There was literally no safe haven. The bonds sold off, even gold and silver, oil, commodities. They had no luck. Tech went down. There was a couple of names that did good, and some stuff related to the virus came up. That's probably why you saw Myrna go up. But now a lot of people are getting ready for the Fed. They're seeing where we are at, and we have closed right at the lows of not only last week, but when we had the first invasion, and then that slipped there to 411. So this is very important. Again, to jump back here to the death cross, I want to give you some fun facts about it because I am sure you are probably going to hear about it, but here's something to notice. The death cross pattern has been a lagging indicator, meaning by the time the S&P typically is already in or nearing a double-digit decline. Indeed, the S&P entered a death cross on March 30th, 2020, when global markets were battered by the pandemic, but it actually bottomed 7 days earlier in March 23. Here's a nice little quote. Over the past decade, a death cross certainly hasn't been ominous. That's what Willie Del Witchy, investment strategist at technical analysis service All-Star Charts, said. Most corrections since then have been short-lived, so by the time the two moving averages cross over each other, the damage is done. If the bottom isn't in place, it is getting close. So this is important. We have a lot of things breaking down, but depending on what happens with Powell, maybe it sets us in with a short-term bottom, so we will see what happens. But I got the place for you. I got the keys, the company news. We're going to go over all of that, and then what to expect for the rest of the week. So drop your thumbs up on the video if you find it helpful, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning. But like we said, you've seen it 25 times since 1970, usually a lagging indicator, but what you saw today, a lot of records were broken. It started with the China stocks. Remember yesterday's watch list, we talked about this, but China was the real driver today, plus any of the uncertainty there in Russia, but you broke the record there with bonds from top to bottom. The bond rates have done worse than 2008, so from 1 year high to now hitting the low, this is happening faster than 2008. As far as the China stocks, they dropped more than they have since 2008, both in China and the Global Dragon Index. It was very, very bad, and that's what got a lot of people worried about. And then on top of all of that, the Nasdaq 100 is now closed down over 20%. It is now as bad as March 2020, which is pretty wild to think about. And now every single market, I believe except the S&P, or it's right at the cusp, they are all in bear market territory right now. So there was nothing good about today, and even what made it crazier is everything sold off. Like I said, you had no safe havens today, and that was pretty odd considering how some things were looking. It didn't look like a panic move, and we talked about that a lot today, but you definitely just saw everything sell off, and there was just nowhere safe to hide. There was financials and healthcare, but they did trip out a little bit. And now coming back to the China news, some of the healthcare stuff was responding to what we saw in China. So now coming into what happened there, this is the important part. They shut down one of the ports, the Shenzhen port. So this is going to lead to more supply chain issues. And then FoxConn, one of Apple's big suppliers, they got shut down. And this is because of the COVID cases. That's why you saw all of the vaccine stocks go up. But add that to what you saw last week, the drama with the United States and the audits and all of that stuff, and then some of the crackdowns, and then the real estate market. Don't forget about Evergrande. All of this just hit, and it is bad. I'm telling you, even JP Morgan, they said China is totally uninvestable right now, even though it's very cheap right now. Nobody wants to touch it. So it was a very bad day. What's going on overseas is really bad. And then China even got involved with some of the war stuff. We got a couple of headlines. U.S. was saying that China needs to step up to stop this. So we will see what happens. But those were the big drivers here of the day. You surprisingly didn't get too much Russia stuff. There was kind of people waiting for some peace talks, but that never materialized today. And then just back and forth here in this. We did get a couple of more actions, but I'm sure in the next few days we will get some more things. We already went over the pretty picture there. So as far as the rest of the week, what I got to say, man, Powell is going to be key. But the one thing you got to watch for is this Friday's expiration. It is going to be a big expiration. There's a lot of money on the line. I believe about $4 trillion of notional value is at stake. So what I'm expecting is there's going to be a lot of moves after that. So even though we have Fed Powell this week and then factoring it into the death cross and how things played out, we will see what happens. And then if you didn't see it today, and this is now also kind of part of the negative that we saw, the Fed futures, like we've been talking about, it went even lower. It is leading the way. The market's still at the lows, but as of now, the Fed futures went down even more, pretty much as the situation got worse and we're 3 days ahead of Powell. The market did not ease on anything at all, and they actually got a little bit more hawkish. We are now pricing in a full 7 rate hikes by the end of the year. That is a lot, and now with everything going on, you might argue it's very, very necessary. So we're going to see Powell's reaction. We have this leading indicator. Again, I think this is probably one of the most important things, and on top of it, if you guys have any questions, I am going to go today after hours. I will answer any questions in the watch list. So God bless you if you post anything and show it love. I appreciate you. If you have any questions, though, I'm going to make sure that we get all of them answered. But a lot of people brought this up in this divergence between the S&P and TLT. This is what we want to watch out for. Again, this is what we're talking about. If they start raising the short-term rates, then that means long-term rates, you could reasonably assume they will go up, and that means TLT goes down. But given the correlation we've seen over the last 18 months, there's been a positive correlation, and really, if the bonds keep moving down, the S&P is going to follow along with it. So if you remember those butterfly plays, we're going to talk about them, but they are all matching up around here at this level. We are waiting for the convergence to happen, but watch out for that. You won't have to watch too much longer. Again, you are getting Powell here on Wednesday, so watch out for that. Watch out for the big expiration, and then tomorrow you will be getting the PPI, and this actually could cause some movement, but we will see. Again, with Powell the next day, it might be tentative, and if we do get any Russia headlines, today was kind of dry, so we'll see what happens from there. But quite simply now, the market is really focused on inflation, but now globally, one piece at a time is starting to get unstable. Again, China's reacting to its own stuff, more supply chain, still got Russia, oil, energy, and now what we really got to watch for is where are the safe havens and how is Powell going to affect the markets and everything else for the future. We will see what happens. But coming into the company news and events, this one I think is important, and we're going to find out. A lot of things are happening on Powell Day, but one of them on Wednesday, nickel is going to be reopening at the LME. Zhang Guangda, they call him quote-unquote big shot. That is the guy who has the crazy short position. He is down $12 billion, but he got JP Morgan and a couple of other banks to give him money. They're willing to back it up, and he is still holding short. So the LME said they're confident that they could open the markets and he won't get affected too much. So we will see what happens. But again, after that opening, maybe it influences other commodities. I will definitely keep watch, so watch out for that. And then Biden, he hit another roadblock with Manchin. Manchin is refusing to give the vote for Fed nominee Raskin, so we're seeing a lot of back and forth. Remember, Manchin single-handedly derailed the whole Build Back Better thing. I mean, well, you could argue that, but anyways. But now he's coming up here with the Fed nominee, so a lot of back and forth with this. We'll see what happens, but it was actually a very top red headline, so watch out for that. And then fund managers, they are running away from China stocks, even with a 75% discount. JP Morgan, they came out with a note. They downgraded about 26 stocks, and they literally said most of these Chinese ADRs right here, right now, they are just totally uninvestable. So Mr. Hits brought this up today. I think it's a very good point. You saw what happened with the Russia ADRs. Well, be careful with anything with the ADS ADR. They're not toxic yet. You saw what happened to the Russia ones, but this is definitely not a good look. And again, they just keep going down, and now a lot of people are just really turned off by it. But again, this was also one of the big factors here today. So there was that, and then a cyber attack temporarily crashed the Israeli government websites. They said it wasn't to take information. It kind of just said a message, and I believe had to do with Iran or something like that. So we'll see what happens. But again, global tensions, you may start seeing these hit the market unless Powell could save things and we start to recover. And then this one, I thought this one was a little bit weird here, but U.S. sewer data, they study and monitor it and all of that, but they're saying the sewer data is warning of a new bump in COVID cases. So I thought that one was very interesting. We'll see what happens with it. Keep your eye out on any of that. But again, the thing with China is literally shutting down because of COVID right now. Seems very different. Again, a lot of Western countries, they've learned to kind of live with it. China's still doing that zero COVID strategy. So after that move in Myrna and everything, I mean, we'll just keep our head on a swivel, if anything. But there was that. And then finally, this one is wild. I can't make this one up. This one is true. The Evergreen ship, the one that got stuck in the Suez, is now stuck near Baltimore. I think it's like New Hampshire, or excuse me, the Chesapeake Bay. It is stuck and they can't move it, and it's blocking traffic. This is not a joke. That's very, very true. I'm still mind blown just saying this out loud. So there was an update on that, but again, in a couple of weeks here, we may start to hear more about the supply chains. But don't forget everything Powell is doing, and then everything the conflict is creating. These are very, very important to inflation. But other than that, there was a couple of Ukraine headlines. Again, there will be a very rare speech. Zelensky, the Ukrainian president, he is going to be addressing the United States Congress today. So that's very rare. He's going to ask for more money and support. There was a bunch of other headlines, again, back and forth between China and the U.S. today. But for the most part, everything was pretty simple. All eyes are on the conflict. And then before you know it, we're going to get Powell. And this may very well start a brand new economic cycle. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 4 different stocks that I'm looking at coming into today. I did make a play on a couple. 3 of them are looking for the downside, 1 of them for the upside with the Fed. But let's start with the first one, AMD. I did make a play on this. Again, I am worried about the chip makers. We were talking about this, and now anything shipping related, supply chain conflict, I think they are going to be at risk. We have those old NVIDIAs, but now if you notice this, I got clapped on a lot of puts from last week in the sense that they're still holding up, but they lost anywhere from 20 to 50%. If you go and look at the VIX, the puts are not at the same price. Again, there was a lot more fear, and I'm assuming they will come back. If we do hit a new low, then the VIX goes up and premiums jump, and that's what we talked about this morning. A lot of these plays, it's one thing to play them throughout the day, but a lot of these, I want to make sure I have time, and I feel like some of the other plays we've seen with like LMT, Yandex, all of that, they're more or less going to be the plays you wake up to and then you get the gain. Again, a lot of it is happening between the days versus if you're buying it in the day, unless we get big volatility, since we've already seen it, it is very hard to move them. And now, like we said yesterday, spreads are widening, prices are going to go up, and if you want to pay for the insurance, the spread is going to really make sure you pay. So definitely be careful. But AMD, I really like it. I went a little bit bigger. Remember, I do have 1 trade on NVIDIA, so that is the other one that I'm holding. But now as far as AMD, I grabbed these in the morning. I went with the April 14th $70 puts. I grabbed 10 of them for about like 49 cents, I think. They went up a little bit higher, but it was only a 10% gain. I think at one point you were up like 20 or 30. Not anything too crazy, but again, take a look at this chart. Over the last 2 weeks, this option has stayed the same, and all it did was decay. So if it comes down, it will get clapped. Otherwise, we need the VIX, and you need it to break through on a level. Again, a lot of stocks, you could see when you pull it up on the daily, they are kind of just chilling out here, holding these levels. So that's what we're waiting for. It's going to be a real risk, but again, considering all the news, I think that will be a driver, but we will see what happens. Again, a lot of things are risky, and actually, if I could make a point here, I might have to make another one. Again, if you guys have any questions on this one, let me know, but here is the butterfly, and we talked about this today. Instead of just buying straight up puts sometimes right now in this market, it may be better off to do a debit spread. So this is the butterfly, and you notice this thing is up 130. Remember, this play hits by April, we're going to turn a couple $100 into like 20 grand. So it's an awesome play, but the butterfly is a little bit more unique. You need it to end up in the middle. But what I'm saying with what I've noticed with this volatility, debit spreads may be the answer, because even if you bought a put and it was starting to go down, given the volatility, the ups and downs, the puts aren't making as much money. So if you could supplement it with a put sell or even with a call sell, depending on which direction, it can really help out a lot. So I wanted to throw this in there. I'll maybe include it tomorrow. We'll give you a tutorial again. If you have any questions, post that below. But watch out for AMD. Watch out for the option chains. Again, right now, if you want to make a play, there's going to be a lot of risk. So keep that in mind. But that is the first play. Coming into the second play, HD. And I did make a play on MOS today. I'll go over it after I cover these. But then we were doing some analysis on it, and we saw that HD represents about 5% of Mosaic, the fertilizer company's revenue. And that's why I said, well, if they're a big customer, there might be an effect, and they were already having that margin pressure from their earnings. So I figured it could be a good one. So I thought I'd look at it. I don't have any plays, but like any of the other plays I'm talking about, you could kind of see how they held up. It just looks like HD is a little bit more stable. The bad part, it has given up a lot, but I do figure that a lot of the options are still cheap. Again, it's a slow mover and then chills out. This one could be good, or especially utilizing any debit or credit spreads, this one could be decent. But that is the second play. I have no plays on that one, but I'm definitely going to be watching that coming into tomorrow and the rest of the week. And then Boeing, the puts that we got last time, remember, we sold the March 18th. We did like $60 into like 300. It was like a 400 or 500% play. I rolled over to just a $50 contract for April. Well, those plays are now down 50%. I'm pretty surprised, but the interesting part is that Boeing is still right at these levels. So somebody brought this up on stream. They said it kind of looks like Baba, and I feel the same. I don't know why Boeing reminds me of Baba. Maybe because Baba is just Boeing twice, but still, it just gives me that reminder. Again, I brought this up here last week in the time we hit it. I think this one will be a big one. We have seen them kind of avoid anything related to sanctions or all of that. So that's been the good part. They did have good news today with some of the China deliveries, or that they are sending a plane there to China. So we will see what happens with it, but I'm definitely now going to be eyeing some of those puts. But like I've noticed with a lot of these plays, whether the stock is at the same price or not, a lot of the premiums from last week were really, really juiced, and it's really hard to get it unless we break new lows. But if we do get escalation, especially after Powell, these could be good, but I am going to take it slow and steady. Again, keep in mind the death cross. We may get a little bit more volatility, but also it may very well be a bottom indicator. So we will see what happens, but watch out for that. And then finally, XLF in the banks. The last thing I expected today was for the banks to show strength as much as they did, especially with what was selling off, but they had a lot of strength today. If they keep showing a lot of strength coming into Powell, I think this might very well be the winner of the Fed. So going to be watching them. I don't have any plays except the old puts. We have JP Morgan in the long term, so we will see how it balances out, but definitely keep your eyes out for the banks. I think almost every single Fed meeting, we have made a bank play. So it makes sense. You should know what's going on. If you don't, the real kicker right now is higher rates. It benefits the banks, and people were geeking off of it in the morning or at the beginning of the year. Everybody's like, oh yeah, banks, higher rates. So we'll see if it comes back, but there is an underlying logic. So definitely keep your eyes out for that. But as far as everything else, the only other play I made besides the AMD today, I grabbed a Mosaic, but I went for June. A lot of time, I grabbed one of the 85 calls for $1.60. The stock was already down like 5% in the morning. It even slipped even more, but it was down 5%. I said, all right, let me get one. And it didn't really move all day. It just dropped in the morning, and then everything caught up to it. But premiums went down at least like 10, 20% at one point. But now with this spread, it's like down like 4 or 5%. So we will see what happens. Again, that is a fertilizer play. Watch out for that. I also did make a trade on a wheat future, or excuse me, a corn future. I did grab one of them. I grabbed a corn corn mini one. So we're dabbling with some of the futures now. So let's see what happens. But as far as everything else for tomorrow, definitely going to be watching Myrna. Again, they help lift up the SPY in a lot of indexes today, both Myrna, NVAX, BNTX, all of those. So watch out for those. Watch Apple. It broke its 200-day support level. And I think the last time I did this was like June 2021 or something like that around here. So this is a key level to watch. And it's also given up all of those safe haven gains. So we're going to see what happens with that. We still have those old Apple plays from last week. Thankfully, they got a little bit more time. They're down 1 penny, but it's still 16% because we went for the out the monies. But like I said, if we flush through to a new low, you will see some of those premiums start to go back up. So we'll see what happens. I am going to be watching the corn ETF again. I made the future play. It allows me to not deal with the premium. I think the option premiums are still a little too juiced on this. And again, you can see how it's already been elevated, but watch out for corn. Again, wheat as well. Just watch the futures. And the thing is, if you didn't watch the interview, again, go check out the interview, both the corn ticker, wheat ticker. We interviewed the founder and CEO, and he was explaining something about the cost of production. So when you start seeing the prices like hang out around a certain range, this is where you can reasonably assume the cost of production for a given commodity. So until we get more updates from either fertilizer all the way down to the harvest, essentially we want to see what range it stays in, because this could give us an idea of how the real world market is starting to factor some things in. So watch out for that. Keep your eye out for them. Even NTR, those plays still are holding up a little bit, but stock didn't do much. Again, nothing did good today. There was just no real safe haven at all. So watch out for that. Watch AMD again. If it breaks here, that's kind of why I got the put. So we'll see what happens. HD, like we said, Abivi, honestly, it's breaking out another high. We've played it a couple times, but if it starts to juice, volume goes through the roof and people start flocking to this. If this is the only winner, I'm definitely down to play it. And shout out to the long term on there, baby. But watch out for them. Watch Lockheed. I was considering grabbing some, but the premiums are high. However, this one could be a very good one to do a debit spread on. So keep your eyes out for that. Then the VXX, this one was crazy. This was an ETN. It's supposed to track the VIX, but then they halted some of the share offerings, and then it just started getting squeezed and getting wild. So there's a little problem here. We're going to watch this over the next few days, but VXX is doing its own thing. So watch for any updates on that. And then BABA, going to be keeping my eye out for them in any of the China stocks. I don't know if I want to buy them, but maybe by the end of the week, if they make a bounce and there's some cheap puts, I mean, they might end up being good. So watch out for that. And then Amazon, they were leading this morning, and then they came down, which was very, very surprising. But the plays we got, I think they went up like 10, 20%. Nothing too crazy, but pretty much I want to see if they're going to give back the gains there from the little split news, and then we'll go from there. As far as everything else in the final, TLT and the dollar chilled out, but now the bonds are going lower, and the real question is, how much lower do they go before the Fed? Will the Fed cause a turnaround? But after the Fed announces it, the rates are going to go up. We're going to get guidance to dot plot. It may very well go crazy. So we want to see what happens, but I pointed this out today. What you've seen here at the beginning of the year, it really reflects what we had at the beginning of last year. So now we're kind of breaching that point by like March or April. Things started to steady out, but really that's what we need to find now. The fact that it didn't hold up from here, if it keeps flushing, it's probably going to take one more leg and then chill out, but we'll see how the market takes it and how everybody prices in the rates. But with everything going on, we may see it go down a lot more, but it is very hard to play. Again, this is probably another of the ones to go with the debit spread, so we will see what happens. But that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need your rumber, baby. You got to validate yourself, but the code loves you. I love you. I'm going to see you in the morning. Let's go.